please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Some key earnings to watch. Voltas will be reporting its Q4 numbers today. Anisha, good numbers expected, or what is the street doing?
It's basically a steady set. Now, most of the consumer durable players like Havells, Crompton, Greaves, as well as Blue Star haven't really surprised us with the blockbuster numbers. The numbers have not been disappointing, but it has been a steady set apart from Havells. Now, similar is the case as what is expected from Voltas this time. We are looking at a revenue growth of around 13%. The margins might remain stable around that 11% mark is what we're expecting. The profit, however, is expected to jump around 7%. Now, to break down the performance, if you look at the AC segment or the UCP segment of the company, we're expecting a growth of around 13 to 16%. Now, apart from volume growth, the company had taken a price hike, and that's the reason we are expecting that the AC growth as far as the revenue is concerned will be a bit faster. Remember, it is the early onset of summer that was aiding the top line when it comes to the AC business of the company, and that is what is expected to come by. Even if you look at the MEP or the electromechanical project segment of the company, we are expecting a growth of around 12% there. Now, that is a segment that has been a bit volatile as far as Voltas is concerned, but last year the base was low, and that's why we are looking at a solid growth of around 12% for that. The most important thing would be to watch out for the margin number when it comes to the MEP segment, because as I mentioned, that has been really volatile. Other than that, as far as margin is concerned, we have been seeing that there have been headwinds when it comes to the commodity prices, and that's why maybe we will see a blip in that. But clearly, the management commentary on AC segment as well as the MEP segment margin performance is what we'll watch out for, Mangala.
All right, Anisha, thanks a lot for that. We'll keep an eye out on that, but let's shift gears to the auto space then. Escorts, they will be reporting their fourth quarter numbers today. Sonia, good set expected?
Yes, good set expected this time from Escorts. In fact, it has been one of the strongest stocks in the auto space. It's just shy of its all-time high. Remember, it hit an all-time high of 1,018 on the 2nd of May, and it has outperformed its peer M&M. Of course, you can't compare M&M and Escorts because Escorts is a pure-play tractor maker. But nevertheless, Escorts this year has risen about 20%, while M&M has risen just about 11%. The volume growth this quarter was very strong for Escorts. The tractor segment, the farm equipment segment, saw a volume growth of almost 55% year on year. The full year volumes have gone up by almost about 26%. And if you look at the trend in terms of volumes, this quarter it's been about 23,000 units that they sold. This compares to on an average about 15 to 20,000 over the last 5 quarters. So the average has definitely gone up over the last few quarters for them. The other businesses have also done well. The construction business revenues increased quite a bit to about 184 crores versus 160 crores last quarter. The railway business has also picked up, and we're expecting it to pick up further this time around. So the other businesses are also seeing a good amount of growth. The management has been very optimistic. They expect a 7 to 8% growth for the tractor industry in FY19, and they have said that they will grow double digits and outperform the industry. So let's see. Expected to be a good set today.
Okay, so solid volume growth expected from Escorts this time, but that was not the case with TVS Motors. Sonia, the margin really blipped. Was there any management commentary in the conference call yesterday that might support the prices?
No, in fact, you know, the management commentary was quite downbeat. For the first time, Anisha, they have not guided for the timeline as far as their double-digit margin guidance is concerned. Now, remember, for many quarters, they've been saying that the company will achieve double-digit margins very soon. They spoke about this fiscal as well. Now, since they haven't been able to live up to that, yesterday in the conference call, they didn't give any timeline. And that's something I think the street would be worried about, the fact that they themselves don't have any clarity on when those double-digit margins would come. In fact, they said that the raw material costs will harden further in FY19, so that could put additional pressure on the company. They said that, you know, they gave some margins, extra margins to dealers. They undertook some dealer margin expansions in order to push their new products, and that actually hit realizations this time around. Now, we have a lot of brokerages that have scaled down their target prices and earnings estimates on TVS Motor post the weak set of numbers. Axis Capital says that going ahead as well, we can expect significant cost pressures because of the new BS6 and the safety norms. So that will put added pressure on margins. And Credit Suisse says that the management refusing to give guidance is a big negative. So I expect the stock to be under further pressure today.
All right, Sonia, thanks a lot for that. We'll keep an eye out on both Escorts as well as TVS Motors. But on to some key earnings to watch from the Nifty space. Bajaj Finance will be reporting its fourth quarter numbers today. Abhishek is here with the street expectations. Morning, Abhishek.
Good morning, Mangalam. So, what to watch out for Bajaj Finance will be that the gross NPA, which was at close to 1.7% in the previous quarter, anything below 1.8% should be good. Coming on to loan book growth, it should be between 35 to 40%. Last quarter, it was at 33%. Overall, in the last 4 to 5 quarters, they have grown at 35 to 40%. Because of the rural book, rural book should drive the loan growth, and it is coming off a low base. So that should also drive your business. Consumer business has been good, so that should also aid in AUM growth. The net interest margin is expected to remain stable at and between 11 to 12%. Our polls suggest an NII growth of close to 35%, while net profit can grow over 42% to 640 crores. But if you compare sequentially, NII is expected to be down by 4.5% and net profit down by 16.5%, because Q3 is generally good for Bajaj Finance owing to the fact that you have occasions like Diwali and Christmas, etc. Back to you.
Okay, Abhishek, thank you so much for that. But let's take a short breather on the show. But we're not done discussing earnings yet. Tata Steel reported a healthy set yesterday with a one-time gain of around 11,000 crore rupees. We'll break down the numbers for you on the other side of this short break. Welcome back. You're watching Power Breakfast on CNBC TV18. Well, as promised, let's discuss some big earnings that were announced yesterday. Tata Steel reported a healthy set of numbers for the fourth quarter with a profit of over 10,000 crore rupees, led by a one-time gain of 11,000 crore rupees. Nigel is here with the detailed view. Nigel, what does the number look like to you?
Well, the numbers were a tad bit mixed, but the outlook is very, very positive. So just to give you a couple of lines on the numbers, India performed, Europe and Southeast Asia didn't perform. To run you through the basic numbers, top line growth of around 7% is a bit better than what we were working with. There was some margin compression, totally unexpected lines of around 250 basis points, and a net profit of more than 10,000 crores, 14,000 crores approximately. That compares with the loss. That's primarily because there was a non-cash gain because of the restructuring that we're doing in Europe. That's in terms of the pension as well, the new pension scheme. But for Tata Steel, geographic breakup is something that you focus on very, very closely. The sales volumes, we already had those numbers with us. The EBITDA number though, EBITDA per ton came in closer towards 16,000 rupees. Now that is at the higher end of what the street was working with. So that goes down as a positive because we were working with a number of around 15,000 rupees, or it came in closer towards 16,000 rupees. Europe though, that was a bit of a disappointment out there. We already had the sales numbers, expecting a bit of a degrowth in terms of sales numbers. It came in down by around 11%, but the EBITDA per ton came in at around 4,500 rupees. Now you convert it into dollars, that comes to nearly around $70 on a per ton basis. That's a tad bit lower in comparison to what our estimates were of around $75 on a per ton basis. Remember, ArcelorMittal, they came out with a set of numbers last week, and that's what fueled expectations that the number could even be at around $80 on a per ton basis. So Europe, a bit of a disappointment. Southeast Asia, very, very small segment, but that as well was a disappointment because the EBITDA did come in low on a sequential basis as well as on a year-on-year basis. A lot of brokerages have written this morning. We have Credit Suisse. They in fact maintained their outperform rating on the stock, a target price of around 860. They are saying that the management's positive commentary is something that's keeping their positive stance in terms of the FY19 profitability. So overall, things will be more good than bad because the quarter 1 FY19 should be better than quarter 4 FY18. But on that note, let's hear out the management detailing their numbers.
In terms of the plant, it's a 5 million ton plant. It's currently operating at around 3.5 million tons. We easily see it operating at 4.5 level quite easily. Beyond 5, will call for more investments, but there is a potential to certainly take that plant from 5 million to 8 million and higher. Well, Bush and Power, we are, as you know, the bids have not yet, we're not at a stage where the COC has told us anything.
All right, so that's as far as Tata Steel is concerned. Let's move to another steel company, Jsw Steel. That one posted a very strong set of numbers, Nigel.
A blowout quarter. Very, very good set of numbers. There was a bit of a whisper. I hear most of the whispers because of the profession that we are in. But, still the numbers looked very, very good. The stock is at a 52-week high. It should continue to do well. Let's run you through the numbers. Top line growth of around 25%. We were working with a top line growth of around 15%. So that looked very, very good. The key reasons, though, there was a top line beat is because the other operating income that's included in the, in the sales number, that jumped up by more than double. Came in at around 790 crores. This is because of some tax benefits benefits in terms of CST as well as VAT that they've accounted for in Dolvi as well as Karnataka. So that's what boosted the top line. Besides that, sales volume growth we were working with was around 5%. It came in at around 7%. And the operational leverage obviously played out. That higher other operating income helped. And also we had higher sales volumes as well. So margins went through the roof, went to around 25% odd. We were working with margin expansion of around 300%. You know, you keep in mind that if you adjust it for that total other operating income, then it would be roughly around 23% odd. So still it would be a beat. Value-added products is something that they're concentrating on. It constitutes nearly around 57% of the total sales mix, and that grew. So that definitely helped them. The other factor is the EBITDA per ton. Remember, we were telling you that we're expecting a number of around 10,000 rupees on a per ton basis. It came in towards 12,000 rupees on a per ton basis. That's the best ever EBITDA per ton, but you'll have to remove close to around 1,000, 1,200 rupees odd, just if you want to adjust for that total other operating income. But still those numbers go down very, very well. The smaller segments did well. Coated products business on a high base delivered a number of around 200 crores. Remember, there was a bit of a backlog that had to play out. So that did play out. Close to around 80,000 tons in the last quarter was pending. That came about in Q4. And in addition to that, they're taking price increases, and zinc prices as well cooled down. So that looked good, and US operations continues to deliver a good profit. The net profit number as well beat street expectations by a mile. Better operational performance, but also the effective tax rate is lower. Remember, in the United States, the tax rate has come down to around 21%. So that's really what helps them as well. Effective tax rate lower helped the net profit number. Brokerage, Credit Suisse, they're maintaining an outperformed rating out there. They have raised their estimates by nearly around 14% odd for the next year. Target price at around 410 rupees. In fact, I caught up with the management late last evening. Let's hear out what they had to tell me in terms of the way forward.
Considering the robustness in the steel demand globally, and also the discipline the Chinese are today exercising in moderating their exports, it is expected that the steel prices are range-bound in future. Even in India, we are seeing a similar trend because there is a very good demand that is picking up. The momentum is very strong, growth momentum. So considering that, we feel the steel prices more or less will remain at the current levels, if not they go up. Even if I look at today the domestic prices compared to Chinese prices on the landed cost basis, they are in the range of again 5 to 6% discount. If we look at Korea, it is 2 to 3%, Korea and Japan. So that is the levels at which the current domestic prices are there. If this is the context in which, if you ask me a question whether my EBITDA margin goes up in future or not, in the current financial year, our product mix is going up. So therefore, my EBITDA margin should be higher. Number two, we identified certain cost savings which are going to happen in this year. Like our coke oven plant at Dolvi is starting 1.5 million ton. So where we are buying the coke today vis-a-vis bought out coke, if I compare, each ton of coke I use, there is a 4,000 rupees difference between bought out coke and purchased coke. So this will get commissioned by September 2018. So there will be definitely a 6 months benefit on account of that, which would flow into the company. Pipe conveyor, where we are spending a lot of money on the logistics at Vijayanagar. So that is getting commissioned in this year. Similarly, lime plant, which we were buying earlier, so that is getting commissioned in this year.
Short point, sir, that these numbers, if everything stays the same and prices hold at current levels, then 11,500 plus on a per ton basis is absolutely sustainable, isn't it?
Qualification is only about the steel price.
All right, so a quick question on coking coal prices, the average of the last quarter, and today what are the prices?
Last quarter, the average was $205. The prices are, there is volatility in the coking coal prices. Going forward, maybe short term there could be some volatility, but we don't expect a huge amount of increase in the coking coal prices going forward. A similar situation in the iron ore prices. So they will be range bound like steel prices which we are anticipating. So it will be at the current levels.
Okay, so that was about Jsw Steel, but Hindalco posted a subdued set of numbers this quarter. Nigel has been telling us how the performance in copper segment was a bit subdued, but my colleague Kevin Lee caught up with Satish Pai, the MD of Hindalco, to discuss the financial highlights of the quarter gone by and the outlook for the company going ahead. Take a listen.
The TCRC starts from January 1st to December 31st. So our Q4 was the calendar year Q1. So the TCRCs had an impact on Q1. Q4. That's why you can see that the copper results were slightly down. They were also impacted by the fact that our fertilizer plant, we took a shutdown. So volumes were at 50%. But now we have fixed that. So going forward, they should be okay. We will take a smelter 3 shutdown at the end of Q1. So that will have a little bit of an impact. But for the full year, copper volumes will be slightly up compared to the previous year.
You've prepaid about 8,000 crores of your debt. What does your current debt number stand at? And are there any plans to bring it down during the next fiscal year?
So our net debt at the Hindalco India level is roughly around 17,000 crores now. Our net debt to EBITDA in India is at 2.62. So we are fairly comfortable. I think what we will probably do because of the RBI requirements is to take some amount of bank loans into corporate bonds when the timing is right. So beyond that, we will probably pay down some more debt as well with the cash we generate. But once we reach about 2.5, we are fairly comfortable at the net debt to EBITDA, and we'll probably take the cash generated to do more expansion in India.
Could you take us through the highlights of Novelis' performance this quarter, and also what the EBITDA per ton was and what guidance you can give going forward?
So Q4 was a very strong quarter for Novelis. I think that they finished with the EBITDA per ton of around $390 a ton. Their volumes were more, I think, around 700 plus. So they did about 3.2 million tons. So I think going forward, Novelis is going to have a strong year. I think that they're going to do about 90,000 tons more of volume.
All right, with that, we'll slip into a short break. Come back, we'll get you a check on the cues to watch from the futures and options space. It's Nifty Bank Weekly Options Expiry today. Welcome back. This is Power Breakfast on CNBC TV18. Let's get an update from the commodity space. Manisha Gupta joins in. Manisha, you know, a few weeks ago we were thinking 60 is the new normal for crude. Then it went to 70 and now it's touched 80 within no time. What's the sense?
Well, absolutely. What a surge that we've seen in crude oil prices. You know, the point is that the crude oil prices have become so volatile and vulnerable that every data, every statement, every outlook is making prices move by a couple of percentage points easily. So last night, what we've seen is the U.S. weekly inventory, which has seen a withdrawal for a second straight week. That has taken the prices higher. You also have a Morgan Stanley report that came in last night for various asset classes. And for crude, they have put a target, an outlook for $90 per barrel. You also are looking at presidential elections in Venezuela by this weekend. So there is some amount of uncertainty ahead of that. And then, of course, Iran is asking China to keep buying its oil. China has booked 65% increase in oil stockpiles in April. So the demand from China is unsatiable. So you have various factors which are supportive. And markets, of course, will continue to keep an eye out on the OPEC meeting on 22nd of June. Ahead of that, there are already statements that OPEC and allies will continue to maintain their output cuts, continue to tighten the global inventories. So that, of course, has led to prices surge back up around. What hasn't seen such great gains really has been the copper prices. So while you have crude oil prices, which are now up 20% in 2018, you have metal prices under pressure, and especially copper is down 6% now for 2018. But important to watch out would be the European Union meeting today to discuss the Trump withdrawal from Iran, the recent Gaza violence, and the steel and aluminum tariffs. So markets are looking forward to this Europe meeting today in the evening. Any statements, any decision that you get out of that would be a game changer yet again.
Hey Manisha, thank you so much for that. We will keep an eye out on that meeting in Europe, as well as the Brent closing in the $80 per barrel mark. But let's shift focus back to the equity world. FMCG major ITC posted quite a good set of numbers this quarter. The net profit came in above estimates, while EBIT growth was stable. Mangalam, you were telling us that the volume decline expected was 2 to 3%. Is that what came by? Is that what the brokerages are saying as well?
Absolutely. That is absolutely in line with what the street was expecting. So the volume growth, depending on which brokerage you're looking looking at has declined by about 2%, 2.5%, some say 3%, so which is pretty much in line with what the street was expecting. So let's take a look at what the brokerages have to say. Credit Suisse, for instance, they say cigarette volumes have likely declined by about 2 to 3%, and earnings growth will move into double digits from Q1 FY19. Remember, last quarter we saw earnings growth of about 10%. They expect the stock to re-rate, but gradually. ITC, remember, now trades at a 45% discount to HUL, but remember the earnings growth for ITC was also 45% lower than HUL. So that is something we'll have to keep an eye out on. But more of the brokerages are saying, again, more of the same. CLSA, they maintain their buy rating, up their target from 330 to 340, but they believe that continued buoyancy in state GST collections and pickup in cigarette volumes are the key triggers. Why continued buoyancy in state GST collections? Well, if the state is collecting more from the GST collections, then they won't impose more duties or more cesses on cigarettes, which should be better for the company's volumes. Deutsche Bank also say that they see a higher probability of rational tax increase in FY19, and which is what gets them to maintain their buy rating on the stock with a target of 350. Morgan Stanley, they have an overweight rating on the stock, but then again they say this overweight rating is premised on an expectation of a steady cigarette tax policy. So all good for ITC just until any adverse tax reaction happens.
So everything working well for ITC. In fact, we saw the up move on HUL as well after the ITC numbers came by, and you have been pointing out the gap between the two is now close to around 8,000 crore.
That's in terms of market cap, but valuation gap is that of double.
Lower, yeah.
So perhaps a large part of the street may have been waiting by for ITC's results and then perhaps take a call on what to invest in. 52 times a company which is trading at 52 times with growth, or a company which is trading at 26, 27 times with 10% earnings growth. So maybe let's see what happens in that trade. But let's move on and shift focus into the F&O space. Yesterday, the Nifty spot, that one closed by about 61 points lower. So that one fell below that 10,750 mark. In that, the FIIs, who went long a couple of days ago, have actually unwound a lot of their positions. So they sold about 640 crores. There was unwinding of close to 5,000 contracts and addition of close to 4,000 short contracts. So if you take a look at the open interest, there was unwinding in both Nifty as well as Nifty Bank. The FIIs bought about 2,800 crores in index options. The key level for the Nifty was the 10,800 mark. The 10,800 put, which saw a lot of selling, saw short covering in yesterday's trading session, and the 10,800 call saw a bit of writing given the Nifty fell below that 10,800 mark. But remember, it is the Nifty Bank weekly options expiry which has also caused a spurt in the FII volumes in index options. Out there, the Nifty Bank is at currently is around 26,200, and out there we've seen writing at 26,200 calls, 26,400 calls, as well as 26,500 calls. In terms of lower end, support has come in only at the 25,800 mark. We'll keep an eye out on a couple of stocks. Reliance Communications enters the F&O ban. Hindustan Unilever saw some long positions being added, and PSU banks, Syndicate Bank and Punjab National Bank, both of them saw further shorts.
Okay, Mangalam, thank you so much for all of that. But that is all the time we had on Power Breakfast today. From the team and myself, thank you so much for watching. Bazaar Morning Call comes up next.